Welcome back to the Broker Power Up podcast, the AIME podcast with strategy, stories, and insights to help you close more loans. I'm Tommy Golightly, joined by Jonathon Haddad. How's it going?
Tommy, it is going fantastic, my friend. We are humming and running, having fun, talking to clients, just in sales, man, just embodying everything that it is to be a sales professional, which is a high-level communicator. It is not a bad connotation, my friend. And we're down. We are here to get rid of that connotation. We are done with it.
And we have a lot to go over today. We are going to have the Broker Buzz, where we dive into the top posts of the Brokers Are Best Facebook group and discuss what's trending, what's working, and what you need to know. Then we're going to have a sales pitch training where John helps us become better salespeople on why your clients buy on emotion and how to use it ethically. And then we're going to wrap things up with story time with John. But first, how we start every podcast, a fortune cookie. And then this one, Bay's fortune.
Good, it's in there.
It's in there. You light up the room. That's all.
You think people have the ability to choose to light up a room?
Yes.
And do you think if you have that ability, do you think you're responsible to bring that kind of energy when you enter a room all the time?
No.
Okay, fill me in on that. Why do you think that?
It depends on the room. If the room is already pre-established for someone else to take center stage, like say at Fuse, the person on stage, or any speaking event, the light is on them. But if you walk into a room and do your best, just walk in with a smile and greet people and engage with other people, I think that's a way to light up the room for sure.
That's because it's like also stepping aside a bit too, right? Where it's like, Don't let the ego get in the way. And I think that part I agree with that. I think the other side of it though too is you have the chance to make these micro impacts on people, especially in environments like that, where you might not be talking to 100 people, but you might be talking to 3, 4, or 5. And if you're the person that's able to bring the light, if you're the person that's able to lift that mood up, there is, and it's not all the time because we're not always having great days, right? No, and you got to protect your energy. I think that is important. But hey, if you have the energy and you have the ability to do it, like you do, like you got to help those people out, right? Make them feel good. If you have that ability to make others feel good, because it is a skill and it is a gift that, few people are blessed with. And if you get that chance, lighten up the mood, man, it does feel so damn good. But to your point, one thing you said that I loved, lighting up a mood, I've been told that, John, you get people excited, you get people this. The difference is, though, when you start to shift, it's not about getting people excited. It's about how can you get them to create action? How can you get them to move in a certain direction? Because I can get you excited with my words and this and how great this is. But is it actually inspiring you to create an action and make a new habit? So that was a good one. We're taking these deep, man.
Yeah. I mean, it literally takes a second or two to smile and acknowledge and wave to somebody. And then it's up to them how they respond. But I've never felt upset being acknowledged or being like waved to or by someone I know, right? Even if you don't, it's just, I don't know.
Yeah, if you do, you're just not a happy person. Like if someone waves at you and you're just miserable and mad at they're waved at you, well, look, there might be some things going on internally, but yeah, that's probably not the person I want to connect with if I can't even get you to smirk or wave back at me.
So it becomes a time saver, right? You invested a second or two into just being like, hey, how's it going? Yeah, acknowledging the person.
I like that we took that deeper.
Yeah,
because you're right. You're so right about that. If you don't do the acknowledging, or if they don't acknowledge you, it's like, I don't want to engage. Like, so do I owe that light to that individual or to that group?
You just saved your time. Absolutely. So let's dive into the Broker Buzz with question number 1. If you pull a second credit report prior to closing and the score goes down, do you have to use the new credit report?
So first and foremost, I realize this is a red Solo cup. All right. And I will say it is nitro cold brew. We make it here. There's no Baileys in here. There's no anything of that nature. So I apologize for that. That won't happen again. But the credit report question. All right. So here's the situation. If it's like a refresh where they're just checking to make sure the client didn't open up new debt. It happens a lot like right before closing. And sometimes in certain instances, they'll actually check like 3, 4, 5 days after the loan closes just to make sure nothing fishy was going on. But it's a refresh of the credit report. So a refresh, you don't have to use the lower score. However, if the credit report is expired, so you have up to 120 days, it's based on the lender, up to 120 days basically to close a loan with that credit report. So if the loan's going to close outside of that 120-day period, yeah, you do have to repull. I haven't seen things like that. I've heard people say stuff like, yeah, you don't have to, even if it goes down. I have never been able to do that if I have to do an actual repull of the credit because the credit has expired. That I cannot do. The other thing I have seen, though, is like you misspell somebody's name and then they don't catch it for like 2 weeks in process. Then they repull and the credit goes down. I've seen that. But based on the credit vendors you work with, there is a workaround where if you call the credit vendor about that, you can actually just say, hey, can you use the same report, but just update the name or the social security number, whatever the case might be. So to answer your question, it is a little bit of convoluted. There's a little bit of gray in here because there's just a lot more that goes into answering it. But refreshing the credit report right before closing, no, you do not need to use the lower score if it comes in lower. If the credit report's expired, yes, you'll have to use the lower score.
One quick little follow-up that made me think about, it's tied to the whole don't make any big purchases around buying a home, right?
Yes.
Is there a threshold that you typically tell borrowers not to pass?
In terms of, so here's
like
how
I want to go buy a new TV. It's $2,000. Should I hold off until after?
Here's what I always say. So look, I'm very real, right? Especially with the consumers about situations like this, just because I've been doing this for quite some time and just seen so many closings and understand that process. If the consumer's like buying a TV, it's more installment debt, right? So it's like if you're going to get a car, a motorcycle, an RV,
okay,
you're going to open a new credit card. Anything that's going to be added to there is a big deal. Now, I will say this: if they have a credit card that's $10 and then in process they put $50,000 on that card, yeah, like that's got to be accounted for. We don't know what the minimum payment now is going to be, and the underwriter will ask. Now, I know that's a one-off. I know someone's not just spending $50,000 and buying a car out cash on a card. However, I have seen it happen, and you do have to be very aware of it. But no, I don't really. If they bring it up to me like a TV or something small, I'm not. No, like go if you have a debit, go do what you got to do. Like, it's just like I look at your debit card. Don't go to Starbucks. Don't go get your coffee.
Yep. Cool. Well, moving on to number 2. About 1 in 4 of my applications right now have student loan payments 90 days late. Is anyone else running into this issue? What are you doing to help these buyers, if anything?
Yeah, so there's a huge bottleneck, and there has been for many years. We've been talking about it now for at least the last 7 or 8 years. What we believed initially, the data indicated when the first crash happened, the biggest reason why is lack of equity inside of homes. So the market crashes, nobody can refinance. Why? Because what they owe on their home versus what it was worth is no longer advantageous. They now owe more than what the home was worth. And so what happened is when that bubble occurred, it exploded and nobody can do anything. You can't sell the home. No one can afford to buy the homes. And the banks are owed money. So you had this huge bubble that exploded. Now, we were talking about the student loans being the next wave of potential bubbles if the government doesn't step in or someone doesn't step in, because it got, I'm just going to say it got out of hand. People were think about this, okay? Think about this. You could go get approved for a $100,000 student loan. Can't go get approved for a $100,000 line of credit at 18 years old.
Yeah, that's.
Well, they're both risk. You know what I mean?
Yeah.
But one's not allowed. This one's just write the check. Yeah, have fun. Here you go. All this money's coming in. That just doesn't work. So this bottleneck's happening, and I don't care what you feel. I don't care what people feel politically. It doesn't matter. Some are being forgiven. Some are not being forgiven. The reality is people are owed money. There's debt out there that is owed. And at some point or another, these agencies that have billions of dollars are going to get after their money. And so, one, it is important to have that conversation with the consumer, especially if it pops up. Number 2, what I do is find an opportunity to set up a payment plan if that's available to them. So log online. There's actually opportunities that you can look up. Income-based repayment plans, IBR is what it stands for. If your loan was a government agency student loan. So that's like Sally Mae that you'll see.
Yeah.
You
Not
can look
private.
online and there's a lot of opportunities there. So that's the first thing that I would do if they could do that. If they're not backed by government agency and it's more, local, private, whatever it might be, I would advise them to call them directly and say, try and negotiate with them. Now, if the number is out of hand and you're just like, there's no way I can do this, do yourself a favor, go get yourself an attorney. That's I'm just being candid with you. That is the conversations I have with consumers, because there's nothing you can do right now based on the way that findings have to be ran in the system. There's just nothing you can do. It's going to come back. It's going to say the loan is not approved because there's 90-day lates on the student loan. And that's fair from the investor standpoint. Remember, I know there's gray. I know every loan has a story, but these investors don't look at it that way. It's black and white. So that's the guidance I would give you. Guide the client. You have 3 potential options in that situation, and you kind of take it from there.
Awesome. And our final question. For someone who has worked the same 1099 job for more than 5 years with steadily rising income, do lenders still average the past 2 years' income, or can the 2024 income alone be used for a conventional?
So this rule has changed and is now the same for both Fannie Mae and Freddie Mac. And for those that don't know, Fannie Mae and Freddie Mac are the ones that handle all of the conventional loans in the country. So we pick a lender, the client, you basically send it out. Here's the options that you have. You go with a lender. Then that lender is either that loan goes through Fannie Mae or Freddie Mac. They make sure that everything looks good. They're the ones that have the automated systems to make sure that we cross our T's, dot our I's. Okay. The rule changed for self-employment, and it's now exactly the same for both of them. If the client has been in business for 5 years, 5 years total, you can use 1-year tax returns. If the client has not been in business for 5 years, you have to use 2 years tax returns. It's that simple. There's very few caveats of using 1 year, but this is for the majority. This is not a what if scenario. This is how you guide your clients. This is how you talk to them. 5 years for both Fannie Mae and Freddie Mac.
Cool. Well, if you want your questions answered on the Broker Power Up podcast, be sure to become an AIME member. If you're not, you can scan the QR code on this next ad. But if you are, and you are in the Brokers Are Best Facebook group, use hashtag Broker Power Up in your question, and we'll be sure to get it answered on the podcast. On the other side, we'll learn why your clients buy on emotion and how to use it ethically. We'll see you there.
Are you a wholesale mortgage professional? Well, then the very first thing you need is a community to help you and your business grow. With AIME membership, your community is right here. Joining our community means never navigating the market alone or operating without a safety net ever again. We are 16,000 members strong of united wholesale professionals. From rookies to top-ranking originators, all dedicated to supporting each other's success so we can grow together. Beyond entry to the best community in the mortgage industry, AIME membership gives you the resources, tools, guidance, discounts, services, and support that help you and your wholesale business grow, thrive, and most importantly, close more loans. AIME membership connects you with leading wholesale lenders and vendors, offering you exclusive access, services, and discounts that save you more money while helping you make more money. Never get stuck on a loan again with our lender escalation program. Grow your network and skills with the wholesale industry's best conferences and networking events. Get the strategies and skills of top originators and industry innovators with AIME's cutting-edge wholesale mortgage education, resources, and content. AIME offers all of this and more, starting at a low price of $19.99 a month. You heard it here first, couple cups of Starbucks coffee. For you to learn more and get started, all you have to do is visit aimegroup.com, AIME group.com /membership. Your community is waiting.
All right, and we're back. So, John, our clients buy on emotion. How do we use that ethically?
Yes. So, Tommy, the important piece of sales, like the biggest, most important thing you can do is make sure you at least have one ear available. Now, why did I say one ear and not ears? Because my acronym is ear, not ears. So this is the EAR acronym, all right? People buy on emotion and justify with logic. So the EAR acronym is emotion, association, and rationalization. Emotion, association, and rationalization. So all clients buy on emotion. Where a lot of salespeople screw up is they take that emotion as, yes, I sold the loan. What you need to do is get the client to also understand the logic. They buy an emotion, they justify with logic. Your goal is, here's the emotional side of it, but let me explain the logic. You don't want to hang up that phone and have them go through the logic and figure. You owe it to them to give them the risk and walk them through that process. So the EAR framework is something that I absolutely love. Emotion is the first part. So emotion, spark the emotion. People buy with their hearts before their heads. Same exact idea and analogy there. So it's a pain. People are looking to solve something. So the emotion is, I hate this neighborhood and want to get out of it. I want my kids to be in a better school district. That's the emotion. And you have some people that, hey, I want the lowest rate because of status. You know these people. They're at family barbecues, and first thing they say is, what rate do you have on your house? There's people like that want status. My culture, Middle Eastern culture, we come from a bartering society back in the Middle East. That's a big deal for my culture. Worked with a lot of clients, and that's a big focus. So understanding the emotional piece is a big deal. Use your ears, at least one of them. Number 2, association. This is the attachment piece of it. This is where you talk about what that emotion was. So example would be something like this. They tell you the kid's school district, whatever the case might be. So you do something along the lines of, hey, this home that we're looking at is exactly in the area that you want your kids to go to school. Is that correct? Yeah. Imagine what it would feel like if X, Y, or Z. You're painting a picture. You're walking them through that process. Now, that's the glitz. That's the glamour. Now, here's where salespeople screw up. They live in there, and that's where they sit. And look, when you first start in sales, you don't do this intentionally. I really don't believe that people are intentionally trying to not use this ethically. Now, are there some bad apples? Of course there are. In every single unfortunate area of this world, there are some bad apples. But a majority of our people, it's not intentional. Why do I know? I've trained and worked with thousands of brand new loan officers, and I've seen it. It's innocent. They're excited on the first couple of calls. So this part here, now you know the emotion. You're walking through the attachment with the consumer. You're talking about it throughout all of it. Hey, imagine being at that barbecue, telling your family about that 2.5%. Now, the last part of it is rationalizing. I always tell clients the risk at the end. Perfect example. Last week, when I was talking to one of my loan officers, we were looking at a loan with a client that had a 30-year mortgage. And she reached out. She came into us. It was a lead that came in, and she had a 30-year. And we were talking to her, and the loan officer and her were connecting. And they said, hey, I don't think it makes sense. She wanted a lower rate in the 5s. And that was it. That was the conversation. Really nice, pleasant. So I look at the loan. I take a second look at it, and we start walking through. And I look at the profile. Really high credit score. Client, she put 20% down a year before to buy the house. Wonderful income. I mean, the profile was so strong, minimal debt, nothing. So I look at the loan and I'm like, okay, what's she want to do? And he's just like, look, she just wants to improve her situation. She hates her 6.99% interest rate. So, all right, do me a favor. Let's just ask her a couple more questions. So we asked her, hey, how do you feel that you're paying $2,400 a month in interest right now? Did you know that if there's an opportunity for me to at least present to you an option that I can save $400+ a month on interest, is that something you'd at least want to look at? She replied and said, I'd love to look at that. So we sent her a 20-year buy down at 5.75, I think was the rate, something along those lines. So it had closing costs, it had points associated with it, and it had a very specific point in the email that I sent her. And in the email, it said, hey, thank you so much for talking. Here's the exact breakdown. I sent her the fees document that we have in Arrive. And I said, after I went through the emotion and building it all up and said, hey, this is how much you'd have. I went through the risk. I said, understand you're paying points. Here's how much in points that you're paying. If you end up refinancing before 22 months, This loan, you will lose money on when it comes to the equity in your home. Anything after 23 months, it's positive, positive, positive. So if you believe rates are going to go underneath this, do your research. And if you believe the 30 years are going to fall underneath this in the next X amount of months, then this might not make sense for you. But I wanted to put this in front of you and let you know that you have an opportunity to accelerate your equity, but here's what has to go right in order for that to happen. I'm simply putting this in front of you because of how powerful your profile was. And we just wanted to make sure you had an option for you and your family. She looked, she reviewed, she called us back an hour later. She said, I went through it. I did some research. I love this option. I want to pay less in interest. I think this makes plenty of sense. That's ethical.
You lay out all the cards.
That's it. And it's so detailed. I make sure the tax and insurance are dead accurate, because what you can't have happen when you explain the risks, when it goes into process, Tommy, you can't have it go like south. You can't have the fees fly up. You can't have things change drastically. You have to be committed to making sure you're taking full dialed in applications and sharing the proper fees with your consumer. She knew exactly what her loan balance is going to be after this loan. As a matter of fact, she said, can I bring my closing costs to the closing table? Of course you can. But she knew all the risks. She knew the exact loan amount. And I'm always very conservative with my numbers. Y'all, don't try to manipulate prepaids. You know who you are. Don't try to manipulate escrows. You know who you are. Build the emotion. Be a sales professional. Create the attachment. But make sure that the client and yourself can rationalize and understand the option you put in front of them. And don't just say something like, does that make sense? And the client nods their head. Yeah. They just want to get off the phone. Really walk them through and say, can you run back what I said to you? Do you understand your risk exactly? Okay, do you know what happens if you refinance in 20 months? You do realize that that you might be losing on this loan if you do that. Okay, perfect. So you see the difference in that conversation? So use an ear and rationalize with your clients. Spark the emotion, spark it. The attachment, create it. And when it comes down to it and they're ready to move forward, make sure you can rationalize everything with the consumer.
Absolutely. So kind of just like how bad news has to travel just as fast as good news, the advantages also have to travel at the same speed as the risks.
Yes, good news and bad news have to travel at the exact same speed.
Yep, absolutely. Well, if you want to become a better salesperson at the greatest mortgage event of the year, Fuse, in October, you can scan the QR code. Tickets are available now. If you are a member, you can claim them. If not, you can purchase one. And we hope to see you in Nashville in October. And on the other side, we'll have story time with John.
Fuse is just around the corner, believe it or not, another year down. And we are excited for the largest event of the entire wholesale mortgage industry. Fuse National Conference 2025 is taking its show on the road. Now emanating from Nashville, Tennessee, from October 23rd through the 25th. This event is all about sales, sales, sales. Don't miss the chance to join us in Music City for 3 days full of the most cutting-edge content we've ever produced, featuring the industry's top minds, leaders, and innovators. Access the newest tools and resources from wholesale leading lenders and vendors. Take part in our acclaimed workshop summits for free. Catch wholesale's rising stars in their very own breakout sessions. And of course, take part in the best and, quite frankly, the most fun networking opportunities you'll find in the wholesale channel. Join us to grow your network, your skill set, and your business at what will no doubt be the greatest Fuse conference yet. Go to fuse.aimgroup.com to sign up and receive updates when tickets go on sale. Secure your hotel room and get your Fuse tickets for free. That's a $600 value for the prices as low as $199 when you sign up for an AIME annual membership. Don't miss your chance to be there when wholesale history is made at Fuse 2025. I can't wait to see you there.
All right, and we're back for story time with John. John, the floor is yours.
Thank you, Tommy. The Watchmaker and the Whisper. The Watchmaker and the Whisperer. About 30 years ago, a man walked into this watch shop, one of those old school places where the owner had so much dedication to his craft that everything was built by hand by one individual. He never dressed fancy, never had the glitz, never had the glamour. This watchmaker loved his craft and had been doing it for decades. And one day this guy walks into the shop. And as this guy walks into the watchmaker's shop, the shop owner didn't rush him. He didn't run over to him. He sat there patiently, watching, listening, being available whenever this potential person was ready to talk to him. Eventually, this client that walks into the watchmaker's shop looks up at the watchmaker and walks over to the watchmaker. He goes to the watchmaker and he says to the watchmaker, I don't just want to watch. I got to tell you these stories about my father. My dad had this beautiful gold Omega watch, and he had it all the way until the day that he passed. And he shared how he'd been trying to buy something meaningful and he'd been waiting for the perfect moment where he's finally ready to start healing after the passing of his father. And he wanted to get a watch made, and he'd been going around and looking all over the place, connecting with hundreds of different watchmakers. So the guy keeps talking over and over again. For about 30 minutes goes on about this watch and his dad, and the watchmaker says nothing the entire time. He's tentatively listening. And finally, as the man stops talking about just how wonderful his father was and about what he's trying to do and about this watch and all of this, the watchmaker didn't pitch him anything. He looked him dead in his eye and he said to him, I think I have something your father would be proud of, and something your son might also be proud of one day too. Those were the words he hit the man with. No fancy clothes, no bells and whistles. And the man bought a $12,000 timepiece 30 years ago. This is a true story. The owner's son, now running the shop, tells that story and shares it with everybody. The watchmaker and the whisper, the power of listening, the power of using your ears, the power of understanding what somebody truly wants. Because remember, if they're talking to you, if the client lets you pull credit, if the client lets you go through that process with them, there's something there, and it's your duty to uncover it. And the best way to do that is to listen carefully, don't overtalk, and stay focused on the task at hand and making sure you're providing the best experience possible to the clients that you're speaking to. That is my story, my friends.
Love it. Love it. Yeah, what really touched me was exactly what you pointed out, and that it's your father would be proud of it, your son will be proud of it. It's that putting that idea of lineage and passing on, and how long it will go, how long it will make an impact.
You're the man, brother.
Cool. Well,
thanks, Tommy.
Of course, great story. Thank you for tuning in to this episode of the Broker Power Up podcast. If you found today's tips helpful, do us a favor. Hit the like button to let us know you enjoyed it, which helps even more people see this content. Subscribe to our YouTube channel and ring the bell to get notified every time we drop new content, which you will not want to miss the content we have coming up. Trust me. Share this video with a fellow broker who could use a power up. Remember to lead by example, to lift each other up, to grow together, and most importantly, close more loans. Until next time, keep powering up.